I want to go to the that global high net wealth topic. So you said that. Well, I was reading on your website. It was talking about that you're on this industry group, the IRS's Global High Wealth Industry Group, which special. It was a specialized unit that was focused on selecting and auditing these high net worth individuals. And so my question is, How did you guys decide who to audit and how you what was like the selection criteria, and does it still stand?
Yeah. So back in 2008, 2009, the IRS determined that very high net worth individuals, their tax returns were not normal. Some of those tax returns were as complicated as some medium to large businesses. They were not what you would expect of a normal person's Form 1040. So what would happen, and this I experienced as well when I, for a brief stint, was an executive director with Ernst and Young. When I was at Ernst and Young, some high net worth individuals hired me to defend them in audit,
Hmm.
and given their wealth, it would be not only me, but I would have a staff behind me to represent them before the IRS. But when the IRS at that time audited an individual, it was one auditor against me and a slew of people. So it was really not a fair fight. So when they asked for one thing, I would just get as many documents together because it was, when you have the staff, you can do it. And then
Hmm.
I would get as much documentation as I could. And next thing you know, the agent says, I would like one, two, three. And they get 15 boxes of information, right? One agent. And that one agent is overwhelmed because the IRS, as probably you know, is understaffed. So that one agent is just overwhelmed with information. And so, what would you do if you had one case where I'm representing the client? I'm one of 50, 100 cases you have, and I've just thrown 15 boxes at you. What next would you like, Bill? I would like you to give me another thing. So here's another 15 boxes. What else would you like, Bill? May I take another? So you end up being overwhelmed. And next thing you know, it's not going the way the government thinks. So in that, you could see the disparity of the playing field. So at that time, what the IRS did was the IRS recognized that the playing field was not to their liking. So they said, if you are in this segment, global high wealth population, we will treat you as if you're a company. And so no more one to one, because it's not one to one. It's not one agent. It was now going to be a team approach. And they're not going to look at just one 1040. They're going to look at the 1040. They're going to look at a trust that you may have. They may have not only trust, but a nonprofit organization. You may have foreign entities. They're going to link the entire story of your return from 1040 and not look at just the 1040, but perhaps open up other linked entities, an S Corp, an LLP, an LLC. They're going to link all of them to figure out what your true income is. And so once, let's say, you become part of the population, you get audited, then there's not going to be one agent. There's going to be a team looking at the entire scope of it. Now, this was back in 2009. It still exists today, the Global High Wealth Unit. And the entry into the door of being a global high wealth taxpayer is if your positive income is 10 million or more. Now, positive income means that any positive number that goes in your return, let's say dividends, capital gains, wage income, unreduced by any deductions like depreciation or anything like that. No negative adjustments. It's just all positive numbers. And so once your positive number is 10 million or more, you're now in the population, the global high wealth population. Once you're in that population, then they look to see if there are certain indicia, and I don't know what they are, but they look at certain indicia to determine whether there is some risk element that warrants an audit of that return. And once it's audited, it's not one agent, it's the entire team. It could be 2, 3 agents. It could be a computer audit specialist. It can be an engineer. So they're going to put in the resources to look at the entire picture and then determine, okay, let's see where the information leads us. This makes sense because a lot of returns that I've seen at the very high level, they are really as complex as some large corporations. So you need a team approach to look at that. Now, I will say this, excuse me, if you're in a global high wealth division, let's say you're a taxpayer in that division, it's now going to flip to a huge next level because of what you may have already heard, which is the Corporate Transparency Act. The Corporate Transparency Act was a law that was passed by Congress a few years ago. And what that does is it may be delayed, but starting in 2024, if you are an entity, let's say an LLC, LLP, any entity that had to file with the state government for existence, let's say an LLC, the Corporate Transparency Act says that you must file a report with FinCEN, which is a U.S. Treasury agency, with your picture, your residential address, and your ownership of the entity. And that's important because that information that you file with FinCEN can then be shared with the IRS, including Global High Wealth. That helps paint the picture of all the holdings that you have. Whereas before, the IRS did not have that information. It couldn't paint the picture. So that Corporate Transparency Act provides a lot more depth and connections than the IRS had before. And if I were still with the IRS, that's probably the first place I would go once the information comes in. I want all the links. So for the IRS, more information is good. For the taxpayers, if you're not playing any games, more information doesn't matter. So here you go. But if you have things to hide, I think certainly having more information at the accessible by the government is not a good thing. And that's what's going to happen starting in 2024. There has been a House resolution bill passed that proposed to delay the effective date of the Corporate Transparency Act by a year or two. I can't remember, but I don't think the Senate has yet passed it. But the Corporate Transparency Act is a big thing that's coming over.